essentially, my approach to stimulating renovating finance is a carrot and a stick. So inside the EPBD, there are minimum energy performance standards. That is a way of increasing the demand for efficient homes and efficient buildings. For the ordering of the provision of finance through banks, you have mortgage portfolio standards to address mortgages and to enable people who have existing mortgages to ask for renovation finance to increase and improve the efficiency of those homes. And then you have the new offers that are incentivized through Article 17, which relate to retail renovation finance offers. So that's, in my book, allowing member states to work with existing retail channels to provide millions of offers of home renovations to significantly scale up the market. So the three factors I think which I would select is number one, having retail reach. So the EU's renovation wave suggests we need to be upgrading 3.5 million homes every year. And so you need to be working at that retail scale, which means banks or post offices or network providers or utilities have to be in the business of being able to offer an opportunity to finance and improve the efficiency of a home. The second point would be segmentation. So we need to offer the right financial solutions to the right segments of the population. 10% of the population cannot afford to heat their homes, and so for them we need 100% grants. That is a social activity and that is addressing the need for vulnerable populations. However, for the 70% of families that own their own homes, we need a financing mechanism that can essentially, like a mortgage, be borrowed against the property, because the property's value will go up as a result of an efficient renovation, and therefore provide them attractive financing conditions for that. And the third factor is just simplicity. We need a retail product that people can easily understand and easily appreciate the benefits. And so those benefits to the homeowner need to be extremely clear, and the process that they need to go through to get hold of the financing needs to be very simple. We discovered that size matters. So the one issue that institutional investors and banks are keen on is transactions that have a significant amount of capital deployed. The issue with energy efficiency in schools and hospitals and offices and even in street lighting is that mid-sized cities just can only invest €1 million, for example, which is a very low, I mean, it sounds like a lot, but in transaction size terms, it's a very small transaction. So we've had to aggregate at Energy Efficiency Capital Advisors many transactions into larger units covering multiple cities and multiple buildings in order to make it attractive to the institutional investors. So I guess the fundamental thing would be do lots of buildings at once if you are a public authority or local authority, because that way you'll be able to generate the economies of scale through the works and then be attractive to the financial industry. So there are two financial programs that I would highlight, which I think are great. So the first is in the Czech Republic, and it's called Renovate Your Grandmother's Home, and it addresses the older people who tend to live in homes that sometimes are the worst performing. They have home equity, and so building societies have got together with the government, and they essentially provide a single one-stop financial instrument that's half funded by the government with a 0% interest and half funded by the building society at their natural interest. On a blended basis, that means the financing instrument's very attractive, lower than market, and that way the government money can go a lot further and they can do a lot more building renovation. The second that I'd like to highlight has different features, so that's KfW's program in Germany. KfW has for decades been focusing on making homes, German homes, more efficient. There they have some things that stand out from that program, which is 11,000 project managers that are accredited by the energy agency, the government and the KfW. The energy project managers will support the household in understanding how deep or when the stage renovations need to take place, and depending on the outcome, i.e. the amount of energy savings that you will make, they will then, if that's reported correctly back via the retail bank to them, they will provide a discount on the loan amount that you then have to repay. In other words, you bought 100, but if you deliver on a very highly performing home, then you may only have to pay back 80. So not only do you benefit from lower interest rates, but you also benefit from a discount on the overall package if you deliver a more energy efficient home.